Hey guys, what's going on? Kevin Cage back with another daily cryptocurrency video. Be sure to hit that like button, subscribe if you like what you see, and let's get right into the information today. So if you've already seen this article, stick around because I want to add my 2 cents to a few points that I see here that are very, very relevant to the XRP space. So to get into this, the OECD Global Blockchain Policy Conference just happened. Apparently, Ripple and XRP and overall, blockchain technology overall was praised. So let's check this out. So the Organization for Economic Cooperation and Development, or the OECD, works with governments, FIs, financial institutions, and policymakers to create a fairer, more equal society. Now, they attract all kinds of big financial hitters in the world of finance, blockchain technology, and this year it seems that Ripple, the technology at least, the technology company, payments company, as I say, stole the show. So let's just take a look here. So we have Miss Marjan Delatine, and she's the global head of banking of Ripple, as we already know, and quoted right here, "At Ripple, we are building a decentralized global network for the transfer of value. Part of that business, as usual, based on the fiat to fiat currencies. You cannot change the world overnight." All right, setting expectations, just like Brad Garlinghouse. Again, this is a marathon, not a sprint. And then as we go here, the fact that blockchain technology was being so openly discussed by global financial powerhouses as if it is already mainstream news is incredibly exciting. Watching discussions like these mean digital assets like XRP, whether, XRP, Bitcoin, Ethereum, the top projects, are becoming mainstream and global mass adoption is on the horizon. Absolutely. And of course, you can see here the speed, cost, and scalability. But as I like to say, and I like to use this analogy, so owning these digital assets now we do not know what is going to survive. It's usually a safe bet that, some of the top projects that have been established for a few years have a little more adoption, but none of this is financial advice. But what I like to say is owning these digital assets right now is like literally owning a piece of the internet. It's like owning a piece of the protocol before it was built. So imagine owning a fraction of the internet, and every time someone uses, that part of the network, you earn some money from it. That's how I see this. Like, that's how I imagine owning XRP, since whether people use XRP or, even the XRPL, the XRP ledger to send IOUs, it will increase the value of my XRP holdings regardless, because XRP is a deflationary asset. What drives the price, you might ask? It's supply and demand, guys. Some people will actually use XRP, whether it's financial institutions, payment service providers, banks, like, certain financial institutions are today. Others might even hoard it and hold it as a store of value. Others might trade it. There's going to be other liquidity providers and market makers as well moving this. Others, as I've said, make markets with it. Some might be streaming it for micropayments. Others will collateralize their XRP and lend it out. There's also the small burn rate that contributes as well for all transactions in the XRP ledger. And, even billions of XRP, what you have to keep in mind, is recorded to be lost because some very well-off people have actually passed away and they lost their private keys and nobody can access that XRP. So that is out of the circulating supply. So again, all of this reduces the circulating supply, which increases demand, hence increases the price. You have to look at the fundamentals. You have to kind of look ahead and speculate because that is what all investors do. All right? I'm not trying to hype this coin. I'm not going to make any price predictions in this video. What I'm saying is this project is undervalued, period. And that is what I invest in. Invest in dips. That is what I do. All right, so we go further here. So currently, international payments are completed via pre-funded accounts to honor the transaction. This means $10 trillion is tied up in what are called Nostro or Vostro accounts. So they said about 80 trillion is really tied up, but they said that Ripple, the company, the cross-border company, remittance company, is going to tackle 12% of that, which is 9.6 trillion, rounded up about $10 trillion that they're targeting. Now, I've heard Brad Garlinghouse say 23 to 24 trillion. I've even heard him say $27 trillion of dormant capital, but to be conservative, let's say it's $10 trillion being tied up. So now right here, Marjan Delatine again, another quote. Typically, a cross-border payment in a very liquid currency, which means there's tons of volume between it, such as the US dollar and the euro, takes 3 to 5 days. The main costs are liquidity management. That's what XRP is solving. It's on-demand liquidity to get rid of the main costs. The system's unreliable because validation happens after the fact, unlike Ripple technology, which validates in about 3 seconds. So again, right here, let's see global payments today. So this current system is very lucrative for the global banking elites who take the cream from the top while our money is sat in these accounts. So that makes a lot of sense to me. Of course, 3 to 5 days, it's costly. Now, what you have to consider is when you're holding this money in these other accounts, in other fiats, there's very different inflation rates. Your money is unable to do anything. Trillions of dollars losing, let's say, even 3% a year is a big freaking number. And again, unreliable. There's a huge failure rate in even sending these payments. Sometimes the money can be lost altogether and they don't know. So essentially, they've even said this, even Swift, they say when they send a payment, especially if it's in an illiquid market, there's not a lot of liquidity, you kind of just, hit submit and you cross your fingers and you hope it shows up in 5 days minimum. And sometimes not at all. It's been recorded to take 14 days if they're even able to find the funds. So when you're sending money, not even considering the volatility slippage within the foreign exchange market, and of course, there's going to be consumption slippage, which will be minimized as we grow the liquidity and volume of XRP, because we're going to be lighting up more and more corridors for clients that's allowing larger payments to be processed gradually, which will automatically increase the value of XRP, because larger payments, you need a higher value of XRP. You think 100 billion or however much true circulating supply, whether you think it really is 43 billion circulating for XRP, it might only be 25 billion. I've seen figures as low as $10 billion is actually circulating. Now, that's actually really not a lot when you're tackling trillions of dollars of problems, and this is only for remittance. This is not talking about trade finance, which is another trillion, like trillions of dollars. We're not talking about securities, which is trillions. We're not talking about the derivatives market, whether the low end of derivatives market is 544 trillion, the high end is over $1 quadrillion, depending on how you measure it. Now, when you add all of these targets together, and then if you want to talk about asset fractionalization and actually tokenizing, not only of course, securities and stocks, but even real estate. Come on, guys. We are in the quadrillions of dollars of potential money, especially with the global transfer market. So with XRP, it truly is a network effect. Okay, we're lighting up the corridors. It's allowing larger payments, and it's going to increase the value of XRP. It's a self-feeding cycle. Now, I say this time and time again. I always use an analogy like it's a snowball rolling down a hill, getting bigger and bigger, moving faster and faster. Now, the entire XRP ecosystem is the snowball. The more clients it has for XRapid, at least, let's just imagine Ripple tackling this one thing at a time. The more clients it has, the more volume and liquidity that exists, especially if you're able to tackle different countries, different corridors, different low-hanging fruit, different emerging markets. The more cost savings are then available for these corporates to use, whether it's a financial institution, a PSP, a bank, you name it. Now, the more clients it attracts to be more competitive and not only save money for themselves, but their customers who also want real-time settlement of funds. We've already seen that little diagram, whether MoneyGram was utilizing XCurrent or XRapid for this corridor. We believe it was only XCurrent because it was the Australian dollar to Mexican peso. Literally, MoneyGram, believe it or not, the fee was 70 times cheaper than Western Union, and the spread was actually a lot tighter. So they didn't hide fees in the spread, and it saved the customer a lot more money. They're going to be, leaving Western Union because Western Union is the #1 payment service provider or money service business, however you want to say it, and MoneyGram is right behind Western Union. XRP is going to get Western Union's attention, whether they like it or not, and they will be adopting blockchain technology sooner than later if they haven't already. All right. And again, this is real-time settlement of funds and it's global pooled liquidity. So let's kind of continue here. And then right here, another quote by her. Coming back to the cost, there are different figures, but in general, the way that the banks work, they trap capital around the world in order to pre-fund international payments. Do we still need pre-funding? Is there a better way? Let me discuss XRP, and there absolutely is a better way. So right here, allows the exact same system to operate with all of the relevant checks, but in a fraction of the time it normally takes, not to mention the vastly reduced costs of transactions measured in pennies rather than dollars, in all without pre-funded accounts. So the cool thing is this. We're obviously suffering from inflation costs, not being able to use that money for anything else, and it just sits there as a just in case. Now, this is not a small amount of money. Imagine what kind of return on investment, what kind of ROI these corporations, these banks, these huge financial institutions could get by releasing trillions of dollars that do nothing for them, just in case, to fund new initiatives to create new streams of income with this money, or even just gain a small amount of interest on this money rather than lose value due to inflation. Whether inflation is 3%, you're losing 3% a year. Let's put it in a more reliable investment and try to get, 4% back and grow that money. That is insane to think. All right? Gain money rather than lose money instead of acting as a just-in-case liquidity with 40-year-old inefficient technology that was built pre-internet, pre-digital era. It's time to update. And like right here, I love this diagram. Right here, $10 trillion. The float, it's just floating. It's sitting there just in case in these pre-funded accounts globally with all these correspondent banking partnerships. As we can see here, liquidity's on demand. And this is literally a giant global pool of shared liquidity, and it's owned by nobody. This is going to create this level playing field that we hear about. Whether, no matter the size of the bank, no matter the size of the financial institution, even if these are just local, market makers and exchanges in the countries, pooling this and then connecting. This is insane, guys. This is truly revolutionary. This is so early in terms of price appreciation for XRP. In my opinion, this is not financial advice, but this is what I'm seeing, and this is what I have been seeing. And then again, right here, Western Union, we're getting a nice balanced overview with the big picture, the new technology, and what Ripple are doing. Now let's hear from Western Union. Rebecca, I don't know how to say her name, I've heard it pronounced, who is going to give us her thoughts. And again, she talks about this, and she basically just says, remittance via blockchain is very exciting and an interesting topic. And one that is obviously interesting to us is one of the world's largest remittance providers. But she goes on to say that she does not see, blockchain being, at least useful in the foreseeable future. And then this is a quote I like. Back in 1994, Bill Gates famously said that banks would one day be taken over by technology. Banks were dinosaurs. Well, here we are 25 years later, and banks are still going strong. And this is Rebecca at Western Union. And to me, that's the type of arrogance that's going to get you replaced. And I'll make a huge bet if I haven't already said it. And Western Union is going to follow suit. They will invest millions in blockchain if they have not already. They probably already have in terms of R&D. They're the number one money transfer service, but they're going to be forced to adapt. Remember, if you're comparing Apple and IBM back in the day, that's exactly how Apple came and overtook IBM. IBM just kept going with the flow, doing, thinking logically, boom, 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 and, kind of just going with the flow and adapting and fixing. Apple truly innovated and created. They completely swept the floor with IBM. If you remember even the stock differences back then, there was a vision behind it. So that was just exciting for me. All right, and then another thing I want to touch on as we're closing out here is, if I haven't said this before, I've said it in a few videos, but it's the Pareto principle, and it's also known as that 80-20 rule. And it's a theory maintaining that 80% of the output from a given situation or system is determined by 20% of the input. So let's just pretend RippleNet could actually have 80% of the global transfer network with 20% of the client base. So Swift today, they have 11,000 customers. They are the dominant, money transfer, legacy system that we use today. 11,000 customers, and let's say, maybe 20% of them hold 80% of the global transfer network. So 20% of that 11,000 is about 2,000 customers, 2,200 customers, for example's sake. Let's say it's 2,000 customers. Now we know, we're saying that we're about 10% in this marathon because Ripple has about 200 customers. So 10% of that. So we're at a fraction. And then Brad Garlinghouse recently said really only 5 to 10% of their customers are using XRP right now. So what are we waiting for? Are we waiting for more regulatory clarity? What do you guys think? Do you think we're just way too early? Do you think we're way too hopeful because we're invested and there's confirmation bias that exists? Do you just want to say, hey, let's get back to 30 cents, 50 cents before we keep speculating? I want to know your thoughts. But in my opinion, I think that this is, the diamond in the rough. This is a hidden gem that is very, very undervalued. And in my opinion, the opportunity of a lifetime. Now, this is not financial advice. I'm sorry if I pumped you up way too much. What I'm requesting you guys to do is do your own research. Get back to me. If you look at the top digital assets, right here, come back to me and let me know what catches your eye and why. And let me know if you feel that XRP is inferior in any way to the other assets. And I want to hear actual facts backing it up in YouTube comments, not just FUD. And I'll try to answer it. And if I don't, message me on Twitter. I will get back to you eventually. So with that, guys, hit that like button, share this around, and literally subscribe. I really appreciate it. And we're slowly growing this channel. So hopefully this video was valuable. And until next time.